The Fed just cut rates and Wall Street exploded, but don't let the rally fool you. There's trouble brewing from Tokyo to Frankfurt to Beijing. Let's break down what really moved markets this week and what's coming next. This week's market fireworks? They started with a 25 basis point rate cut from the Fed, the first in 2025. That lit up the Nasdaq, plus 2.2%, the S&P 500, plus 1.2%, and small caps soared too. The Russell 2000 hit a new high because lower rates equal cheaper borrowing. But wait, if the Fed cut rates, why did the 10-year Treasury yield spike to 4.13%? Because Chair Powell stayed hawkish on inflation. Rate cut? Yes. But the Fed isn't dropping its guard. In Europe, markets barely moved. Why? Because the UK labor market's flashing stagflation, wages are up, jobs are down, and the ECB and Bank of England are stuck. Inflation's sticky, but growth is weak. Meanwhile, Japan is quietly rewriting the playbook. The Bank of Japan's exiting its ETF stimulus, and 2 board members just voted to hike rates. Yes, in Japan. After decades of zero rates, this is a huge shift. In China, the slowdown is accelerating. Retail and industrial data missed. Housing prices fell in 70 cities. Beijing sales collapsed -19%. Markets are begging for stimulus, but so far, radio silence. So what should you watch next week? PCE inflation data on Friday. It's the Fed's favorite. A hot number equals fewer cuts ahead, and markets won't like that. And don't sleep on U.S. housing. New and existing home sales drop. That could spook rate-sensitive sectors fast. Top 3 risks: inflation reacceleration in the U.S., stagflation signals from Europe, China delays stimulus again. Markets are optimistic, but the global picture is messy. Diverging growth, rising yields, and fragile confidence across major economies. Want deeper insights, not just headlines? Listen to the full podcast now. Like, share with your team. Subscribe for weekly breakdowns, 3 minutes that actually move your thinking.